This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every week, you know who it is, it's Robb Reinhold.
Hello, everybody. So nice to see you here. And this week I wanted to talk a little bit about my Flat Earth Trading Society. You guys all know about it. I'm not going to spend any more time on it. But I just want everyone, if you haven't been watching it, we're up to trade number 27. And right at first, we had this huge run, a bunch of winners, and then we cooled off a little bit, dipped back down, and then we had some more winners, ran back up, and then we had a streak of about 6 or 7 losses in a row. Now, remember, these trades are all done at random, and we had longs and shorts. So over the last 2 weeks, this market has plunged, and all the shorts that we ended up doing randomly, they all got stopped out for losses. They all went up. All the longs went down. We had this period of losses to the point for the first time in the experiment, we are down below 1 on the profit factor. And so I love this experiment because this is how real trading works. This is just so indicative of how it works. And what happens is the market will turn around or the market will keep falling and we'll get a couple, 5, 6, 7 go our way, have a big profit. And this little time, this little blip is going to be in the rearview mirror. However, at the time, if you're new at trading, it can be very painful. You just got to, again, trust in your system and just follow it. So I love what we're doing at the Flat Earth Trading Society because it's really close to real life.
Well, in real life, 6 or 7 losses in a row would wipe out your average trader. Did it wipe you out? How are you still in the game?
No, we are doing proper position sizing and proper position management. So it's not a big deal.
Imagine that. So episode 47, traders, is a little bit of a branch off of things we've talked about in the past. But every time we do this, Rob, it ends up resonating with quite a few people. At least they tell us that in the comments section. So I think this is definitely an episode worth doing. But this is another one of those episodes that you put together. So go ahead and start us off, and I'll jump in where appropriate.
Thanks, Patrick. We are basically going down the list of cognitive biases that people have. This is really what this is. We like to mix in some episodes about other things, but really when it comes down to it, trading psychology is all about these biases we have. And this episode is about familiarity bias. Familiarity bias is a cognitive bias in which people tend to rely on information that is already familiar, not necessarily correct, but already familiar to them when making decisions. We're going to bring these biases into trading, and there can definitely be some problems that it happens in the world of trading. I'm going to give a couple of real-world examples of just how it works out in my life. I've been married for a long time, and I am the person that likes to go out and do research and get information from the internet. So whenever I have something I have to fix, so let's say that there's something wrong with the disposal. My wife will be like, oh, why don't you call my brother? He knows how to fix disposals. And I'm thinking, why don't I go online and, get reviews from tons of different people that actually have the exact same disposal I have? It's just different ways we look at things. For her, she likes really getting her advice from people she knows and trusts because that feels more comfortable. We do this all the time in life. And let me work this into what I've seen at Maverick Trading and Maverick Currencies, is that people that come in, we bring them in as traders. I watch their trades, and a lot of times they make too many trades in something they're familiar with. Let me give you an example. If I bring anyone in at Maverick who has worked in the semiconductor industry, if I watch them trade, 50 to 80% of their trades will be semiconductor stocks. Look, it's not the best trade out there. It's not anything. It's just what's familiar with them. In the currency world, I've got Canadian traders, and I watch, and they trade the Canadian dollar way too often. It's not just, oh, I'm finding a good trade. They are biased towards that Canadian dollar. And I have to reach out and say, hey, look, you're making way too many Canadian dollar trades. There's no way the Canadian dollar has made that many trade signals. You are having a bias here because, again, they're Canadian. They like their currency. Same thing, people that are based in Europe, they might make more euro trades than anyone else. Someone in Switzerland might be biased to that Swiss franc. Here's the problem. That's not the best trade. It's just what's familiar, but they don't even know they're making this mistake. This is one that always blows me away. Whenever I have someone, I see them trading Tesla, Tesla, Tesla. If I ever call them up, Patrick, what do you think they drive?
At the very least, an EV, probably a Tesla, though.
Yeah, and do you think they're ever short Tesla?
Oh, no.
Only long. So again, this is a bias that creeps in all the time. And when I reach out to our traders, they don't even know. They're like, oh, am I? Am I trading Tesla too much? Well, I didn't even think about it. These are the biases that creep into your trading. Patrick, have you ever seen biases like that from some of the people that follow you?
Yes, but in a different way. So I'll turn it back over to Forex. I think the best way I can equate this is when unless they started off with my channel, which I think is rare, most people learn technical analysis by using price action tools. That's been the standard for a very, very long time. So when I come in and tell them to do the opposite, even if it makes sense to them, even if they're not really happy with the results they're getting, this is all they've ever known. And I don't know, maybe you can speak to this, Rob, if it's laziness or if it's just familiarity bias. They're like, well, everything I've known about indicators has been, these 3 or 4 junky ones. But everything I've seen on price action has been my online trading school showing me how great these things work. It's always been this person on Twitter, on YouTube, cherry picking the times where it worked spectacularly. And this is all I see. So to me, even if I'm not doing well at this, it's just a matter of me sticking with it. And it will eventually magically start turning tables into my favor. And I think that's how most people feel. But I think deep down, there's an edge of either being too comfortable or being lazy. I have another example after this, but I want you to speak to this one, Rob. Do you have any thoughts on it?
I absolutely have thoughts. And what it might seem like laziness is like, oh, I don't want to learn new things. I don't think that's the case. Here's the thing about biases. We're not aware that we have them. Now, I know that's a shock to everyone, and I know you're thinking to yourself like, oh, I don't do any of these biases. Guess what? We all do these biases, and we all do them all the time. The key, and this is the whole key to the Trading Psychology podcast, is to be self-aware to when you are showing a bias that you understand it. And so I don't see people as lazy. I see people as, hey, I've spent time and effort learning this. And here's the thing I've learned about life in general. How much something matters to you is directly correlated to how much time and effort you put into it. So if you've put 6 months, a year of time and effort into a certain trading style, you have so much invested in this trading style being correct. How could you justify if you after a year say, oh, it's not correct? How could you justify the last year? Now look, I did this with Elliott wave theory. I fell into Elliott wave rabbit hole. I went down it. I thought it was so cool. And after about 6 months, I realized all my trades I was using Elliott wave weren't as good as the trades I was doing before because I was just micromanaging every single thing. I was able to step away and say, hey, you know what? I'm happy that I went down that rabbit hole. I know a whole lot more, and now I can talk to traders about Elliott wave. But sometimes it's very difficult to say all that time and effort I put into that maybe wasn't worth it. It's really more about ego than laziness.
And so what you're speaking to is the sunk cost fallacy. And I think this is everywhere. And this is why I understood a lot of the pushback I was getting. A lot of the insults and barbs they would throw at me early didn't really make a whole lot of sense. And even at the time, even back then, I knew why they were doing it, because I think a part of them knew that I may have been right about this, but they had put in 5, 6, 7 years. And sometimes they would even say, hey, I've been doing this for 10, 15 years, which is the worst argument ever, because just because you have experience doesn't mean you're good. You could have been absolute shit at something for 15 years. And it's usually those people in the workspace that always like to tell you how long they've worked there. Anyway, but yeah, so it's the first time somebody described sunk cost fallacy to me was like if you bought a car and it's a total lemon, but you paid a bunch of money up front for it, you've paid a bunch of money to have all these things fixed, and now you're just going to let it go for a car that actually works? Probably not. You're probably just going to drive that lemon until the wheels completely fall off, literally. So Yeah, I understand that. And maybe that's not laziness. Maybe it is. I don't know, Rob. It's one of those things. Is being overly comfortable being lazy? But either way, I think the moral of the story is here. You have to try and see past that. And if you really have put ample amount of time in something, the only thing I will agree with you, Rob, Elliott wave theory is probably not the way to go, but I will disagree. Maybe 6 months wasn't long enough. I think if you've given it ample time and the results aren't there, then you should really look to moving on to something different. And that includes my system as well.
Let me go into Elliott Wave here, because let me just say this. After that 6 month or whatever period it was, I was absolutely a better trader. Now, I love the Elliott Wave concept. The Elliott Wave concept of, hey, we move in these waves. And a lot of these waves can be 5 patterns, 7 patterns. And some of these waves are bigger than others. So I absolutely 100% use a lot of the Elliott Wave concepts in my trading. I might get a little bit more aggressive if I look and say, okay, we just had a big steep fall, big fall over a long period of time. We got a really big rally, which is a wave 1. We get a short, sharp pullback, wave 2. That bounce as a wave 3 is typically a really good time to get more aggressive than you would in other times. Look, sometimes it fails, sometimes it doesn't. But I absolutely use Elliott Wave, but I'm not an adherent to the minutia, because when you get into Elliott Wave, the minutia is incredible. It has to pull back to this Fibonacci perfectly. It has to do this perfectly. And if it doesn't, it's so rigid, it doesn't really give you the latitude just to play the waves. So I took that and I put it into my trading, and it's absolutely made my trading better. And I've thrown away all the rest.
Yeah, and I'll make a confession too. I did a whole, I think it was an old podcast episode on just trashing Elliott waves. But I actually do love the theory too. It speaks to the cyclical nature of things and patterns and how they always repeat. But when it comes to Forex trading, when you're trading one thing against another, and not just against the price of the dollar, I think the whole theory gets thrown off. So that was always my thing. Anyway, back to going to my other example, Rob. And I think this is almost a better one, because this is something that I think affects a lot of Forex traders, crypto traders, people like that. And that is only trading certain pairs. I never understood this. I always said if you have something that works and you're trading the daily chart like we are, so you're not sitting there all day clicking back and forth, you can trade a lot of pairs. But I think most people still don't. I think they have certain pairs that are comfortable to them, which I also challenge, because that doesn't make any sense. If we were to let 2 months go by, Rob, and I were to take every pair and eliminate the actual name of the pair and just show you the chart, you wouldn't be able to tell what they were. You would have no idea. Yet you're going to tell me that you feel comfortable trading euro dollar, dollar yen, CAD Swissy, whatever, but you won't trade the others. I don't know if maybe that's because other pairs haven't performed very well in the past for you, which also doesn't make sense because those pairs always come back around. I don't know, but do you feel like this is a different type of familiarity bias than what we've talked about in the past? Because I can just never make sense of it knowing what I know now.
No, that is exactly what familiarity bias is. That's the definition. One of the things, again, and I hope I don't step on anyone's toes, if you've ever said this before, I'm sorry for what I'm going to say. I'm not sorry at all, but I'm sorry for what I'm going to say. If you ever say something like, oh, well, I only trade euro dollar because I know how it trades. I've watched it for years and I know how it trades. I cannot stand that. That's, first of all, why would you watch something for years? That's the dumbest thing in the world. And how would you ignore all the other things that are out there? It never made sense to me when I hear people say, oh, I only trade Microsoft. I know how it trades. Like, no, you don't. You don't know anything. You don't know shit, as we've said many times in this podcast.
I'm laughing. You don't know shit. People actually think they are tapped in to the telekinetic waves of the Microsoft chart or the euro dollar. It's such crap. And I'm very quick to jump on them and dismiss this theory as soon as I can. Nowadays, I really don't care. If people are going to say stuff like that, it's not my job to come in and correct them. But back in the day, especially when I was giving more one-on-one to people I knew back before the channel. This is one of the first things I would always say because we heard this a lot.
So let's check off the trading one security, one pair, one anything, because you, quote, are familiar with it. Literally the definition of familiarity bias. If you're doing that, let's just have you stop doing it. Here's the next thing on the list of familiarity biases: watch lists. Now look, in Forex, I understand that you only have a certain amount of pairs. And so yes, you will have all your pairs. Like I personally have all of the pairs of the 8 major currencies I trade, because there's not all that many pairs all on one screen. And that is a watch list, technically. That's technically a watch list. Okay. Watch lists in like stocks drive me crazy. Now a watch list is, and I remember I used to have a watch list for years, and it was like my secret little thing. And I had all my stocks that I, quote, liked. These are the stocks I liked. And sometimes I found a new one and I'd add it onto my watch list and be like, ooh, I like this one. And then every so often one just got kicked out. I'm like, sorry, buddy, you're just not any good anymore. I don't like you anymore. And that watch list, pretty much all of my trades were just in that watch list. Now, this was years ago. This is 20 years ago. We didn't have all the cool kinds of software we have now. If you are still using a watch list, burn it, bury it in the backyard, and never go back to it. Everything, we have so many great technological software programs that we can use to say, hey, I'm looking for something that's doing this. I'm looking for something that's doing this. In the stock market, we have scanners. Give me stocks that are trading above a 20-day moving average, but not too far, blah, blah, blah. And it can just hand deliver you, here's 7 that are doing it right now. Having a watch list is the definition of familiarity bias. Now, look, I understand in Forex, like I said, I list all the currency pairs just so I have them as quotes, but I don't just trade them based on my watch list. I go through a process where I identify, I want to be long dollar here and I want to be short Kiwi. Then I take a look at that chart.
And just for clarity, traders, he's talking about in the scope of trading, not investing. In investing, watch lists are necessary, but in trading, I agree. Yeah, they serve the same purpose as only paying attention to 5 or 6 pairs. So I guess now that we've kind of laid out what this is, let's talk about the problems this can lead to if it's not obvious, and then kind of wrap it up with a solution.
Great. So familiarity bias, what it's basically doing, when you come to the market every single time you sit down to look at the market, the thing you're trying to do is come in as a blank slate. If you can come in as a blank slate, and again, we've talked about all these biases that creep up. We've talked about what happens after you have 3 losses in a row. When you come into the market, you've got baggage. The more you can come into the market every single time with no baggage from past trades, with no confirmation bias, and no familiarity bias, to where you truly look at all the things that the market has to offer and come to the conclusion of the best trade for you based on the data. That is why familiarity bias is dangerous, because you're going to go in and only look at a small part of it because it's familiar. So recognize that. Again, a couple things I pointed out. If you only trade certain pairs because you think you know how they trade, you are using familiarity bias. If you have watch lists that you've had for a while, you are using familiarity bias. Get rid of those and go into the market with a clear mind with all the possibilities. That's going to be the best way to do it.
And just remember too, traders, we've talked about eliminating emotions on this show many times. And what I think is the real reason behind why people say the things they do about this, Rob, like, oh, I'm just really comfortable trading Euro USD. I really understand how Microsoft moves. It's not, I don't think that they really think that. What I think is really happening is that particular currency pair or that particular stock, at least they think, maybe the numbers don't reflect this, but they think that that pair or that stock has treated them really, really well over time. And these are emotions you can't shake. If that stock gave you one win and then followed it up with 4 losses, you're going to ignore most of those losses to get back to that one win. For some reason, people generally harp on the negative, but not when it comes to trading. They get overly optimistic. And so that's the one thing I kind of want to leave you with here in terms of the problem, and I guess it's part of a solution too, is understand that these are probably just emotions. You're probably emotionally tied to these particular instruments. And again, the chart is always the chart, and the chart is going to be good sometimes, it's going to be bad other times. And you need to branch out and give yourself the biggest possible chance to win over time. And you're never going to do that. You're never going to grow. You're never going to innovate if you're stuck in these traps of being super biased and emotionally tied to these particular instruments.
Before we let everyone go, I'm going to end this with a challenge. I want to challenge any one of you who, again, are only trading a few pairs because whatever you say, or if you're using a watch list, throw them away. See what happens. And I know that's super uncomfortable because, again, it's unfamiliar. That's, again, the key. Throw them away and see what happens. I'm telling you, you will come into the market with a clearer head and really look at the data.
Yeah, you just have to ask yourself, do I want to grow as a trader? Do I want to get better at this? Do I want to put myself in the best position possible to win? Or do I just want to do what's comfortable? I think the choice is kind of obvious. You put in all this work to get here, and now you're just going to do what's comfortable. If you're just going to take that logic into trading, you should have just not even started. You should just sit back and play video games all day because that's comfortable. But that's not who you are. It's just very weird that you got this far and then decided to stop. So it's probably that old familiarity bias, that old comfort, that old laziness that's coming back around at the wrong time. And we wanted to make this episode today to hopefully get you out of that if this is something that is affecting you and affecting your trading. Do you have anything else to add, Rob, before we wrap it up?
I just want to point out that this isn't just for newer traders. This might even affect older traders more, traders that have 10, 15, 20 years. Like I fell behind in the late 2000s. A lot of my traders were really getting into programming, and I didn't know it. And I fell behind, and I thought to myself, I got to get on the ball and at least learn some of this. I'm not a great programmer still, but I recognized that, okay, I got into a rut. The market was changing. Technology was changing. I've got to get on board. I am using AI so much, and I'm using it in some of my trading because I cannot fall behind. I've got to always keep learning, keep growing. And if you do that, you won't have as much of a problem with familiarity bias because you're always tackling the unfamiliar. That is the key to keep growing as a trader over your entire life. That's all I got, Patrick.
Yeah, and I'll wrap it up by saying I guess where I fell into laziness was, I always say keep improving your system. And I was doing that, but I was trying to improve the indicators I already had in my algorithm. And I especially saw this really come to life during the indicator profile series that I started in the past year and a half or so. I'm like, wow, I always knew they were out there. I just never saw them get tested in real time just to show me how good they were. I'm like, God, I really need to start testing brand new indicators into this algorithm that I have had for years. Now, me having it for years is different from somebody who's only 2-3 years in having it their entire time. I've done this a long time, and I've worked a long time to get to what I have right now. And now I got to introduce entire new indicators into it. I didn't want to do it, but I did it. And now I am developing things that work better than what I already have. So again, this can happen to everybody. I think you're right, Rob. I think it actually happens more to experienced traders than it does new traders because new traders are still trying to feel the whole process out. But this is a level of complacency that I think older, more experienced traders do get to. And we have a lot of you that watch this show. So I hope there was a real takeaway from this. And Rob, I'll go ahead and let you kind of take it home here.
All right, thank you. And I love your indicator series as well because what you're doing is you're challenging your system. And one of the things we've talked about on pretty much every episode in the Trader Psychology podcast is to be paranoid. Now, we talked about that paranoia of, oh my gosh, these are the mistakes I've made in the past. I'm paranoid and I'm going to make them again. That paranoia is good. That paranoia is always making you look at, okay, what's the truth? What's really happening here? What's going on with me? So introducing all these new things is so great because you're doing basically the same thing, but not to your emotions and your psychology, but to your actual system and the technicals. Always be challenging, always be on guard, and you will always be growing. And if you do find something new that's better than what's old, replace it. Replace it. That's how growth happens. That's all I got, Patrick.
So traders, thank you for tuning into episode 47 of the Trading Psychology Podcast. Rob and I will both see you next week.
Goodbye, everybody.